Across the United States, thousands of ordinary working adults are quietly restructuring how they earn money. They are not relying on loans, credit-based expansion, or financial leverage. Instead, they are using practical systems that turn effort into steady monthly income. The $5,000 per month level is not being reached through dramatic wins. It is being reached through alignment with how the American economy actually pays for value. This shift begins with understanding demand. In the U.S. economy, most money moves through services and operations rather than financial instruments. Businesses pay for problems to be removed. Households pay for time to be saved. Organizations pay for reliability. When individuals position themselves close to these needs, income becomes predictable. One of the most common starting points is operational support for businesses. Every company, regardless of size, runs on processes. Scheduling, data handling, reporting, compliance tracking, customer coordination, and internal documentation are all required but rarely optimized. Many business owners dislike managing these functions. Independent operators step in to organize and maintain them. These roles are not glamorous, but they are valuable. According to U.S. small business surveys, owners consistently rank administrative and operational inefficiency as a top pain point. When someone solves this problem consistently, businesses pay monthly rather than per task. This creates stability. A few clients paying recurring fees can already form a meaningful base income. What allows ordinary people to enter this space is accessibility. The knowledge required is learnable from public documentation, software manuals, and direct experience. There is no gatekeeping. What matters is execution quality and dependability. Once a system is built for one client, it can often be adapted for another with minimal changes. Another strong path comes from specialized support services tied to existing industries. Healthcare offices, logistics firms, construction companies, and local service providers all rely on workflows that must function daily. Specialists who understand these workflows provide setup, maintenance, and troubleshooting. The work is practical and outcome-driven. Payment reflects reduced friction and saved time. Rates increase with familiarity. As individuals gain experience within one industry, they become faster and more accurate. This efficiency raises effective hourly income without increasing workload. Over time, fewer clients are needed to reach monthly targets. A separate category involves turning professional experience into structured solutions. Many Americans have worked years inside roles without realizing the value of what they know. Training guides, operational manuals, internal checklists, onboarding systems, and workflow templates are all sellable when packaged clearly. These are not theoretical products. They are tools that replace confusion with clarity. The demand exists because businesses prefer proven frameworks. Reinventing processes costs time and introduces risk. When a ready-made system is available, decision-makers pay for certainty. This income does not depend on continuous labor. Once created, these assets can generate revenue repeatedly with minimal updates. Local service coordination also plays a major role. In many cities, demand for maintenance, cleaning, turnover support, and inspection preparation remains steady. Operators do not need to perform physical labor themselves. Their role is coordination, scheduling, communication, and quality control. Customers pay for outcomes. Workers are paid per task. The operator earns the spread through organization. This model succeeds because it aligns incentives. Clients want reliability. Workers want consistent jobs. The operator provides structure. Public housing data and rental turnover figures show persistent activity across markets, supporting long-term demand. Scaling comes from adding routes, zones, or teams, rather than increasing personal effort. Another overlooked income stream is compliance and documentation support. Regulations create administrative burden for businesses. Filing deadlines, record-keeping, renewals, and audits require precision. Mistakes are costly. Independent specialists manage these processes using official government portals and published guidelines. The work rewards attention to detail and consistency. Because errors carry consequences, clients value trust. Once established, these relationships last years. Monthly retainers are common. This predictability helps income remain stable across economic cycles. Software-related assistance also offers opportunity without speculation. Businesses adopt tools to improve efficiency but struggle during implementation. Setup, data migration, customization, and training are frequent obstacles. Specialists who focus on onboarding and optimization reduce downtime and frustration. Payment reflects avoided losses rather than abstract value. Software companies release constant updates, creating ongoing demand for configuration help. This ensures repeat work. Individuals who stay current maintain relevance without chasing trends. Research and reporting-based income is another path grounded in effort. Decision-makers need summarized information. Market conditions, location analysis, operational benchmarks, and performance comparisons save time. Public records, earnings calls, surveys, and government data provide raw inputs. The skill lies in synthesis and clarity. Subscriptions or recurring reports spread revenue evenly across months. This smooths cash flow and reduces dependency on single clients. Accuracy and consistency matter more than personality or visibility. What connects all these paths is a shift from selling time to selling outcomes. Time is limited. Outcomes scale. When individuals define what they deliver clearly, pricing becomes straightforward. Businesses pay for certainty and reduced stress. Reaching $5,000 per month rarely comes from one source initially. Most people layer 2 or 3 aligned streams. A service base provides stability. A repeatable product adds leverage. A coordination role adds scale. Together, they create resilience. Expense control accelerates progress. Individuals who keep personal and business costs lean reach targets faster. Early revenue is reinvested into tools that save time, not appearances. This discipline compounds results quietly. Learning remains practical. Instead of consuming endless information, successful earners focus on immediate bottlenecks. They test, adjust, and document. Feedback loops replace theory. Each improvement strengthens the system. As income grows, structure replaces improvisation. Processes are written down, calendars are protected, communication templates reduce friction. This professionalism attracts better clients and higher rates. The American economy rewards reliability. When someone consistently delivers what they promise, payment follows. $5,000 per month becomes achievable not through risk, but through alignment with real demand. This approach avoids financial strain. There is no pressure from repayment schedules or external expectations. Growth is funded by revenue already earned. Decisions remain calm. Mistakes are manageable. Stakes? By the end of this stage, ordinary Americans find themselves with something more valuable than income alone. They gain control. Control over time, workload, and direction. This foundation prepares them for long-term stability rather than short-lived gains. Part 2 will explain how these systems are stabilized, protected, and maintained so that income remains dependable month after month without adding stress or complexity. Once ordinary Americans reach a steady $5,000 per month through practical income systems, their focus shifts from growth to durability. The question is no longer how to earn more, but how to protect what already works. At this stage, stability matters more than expansion speed. Those who succeed long-term understand that income must be engineered to survive disruption. The first adjustment is restructuring work into recurring formats. One-time tasks create uncertainty. Recurring arrangements create predictability. Monthly service agreements, maintenance retainers, and ongoing support packages smooth income flow. Clients prefer consistency because it simplifies budgeting and planning. Providers benefit because revenue becomes easier to forecast. This shift reduces emotional stress tied to fluctuating earnings. Clear boundaries around scope also become critical. Early on, many people over-deliver without structure. Over time, this leads to burnout. Stable earners define exactly what is included and what is not. Written scopes protect time and maintain quality. When expectations are managed properly, relationships improve instead of becoming strained. Documentation plays a central role in sustainability. Every repeatable task is written down. Steps, tools, timelines, and standards are clearly recorded. This reduces dependency on memory and improvisation. Documentation allows work to continue smoothly even when schedules change. It also creates the foundation for assistance without loss of quality. With documentation in place, delegation becomes possible. Routine tasks are handled by trained helpers while the primary operator focuses on oversight and decision-making. This division increases capacity without increasing personal workload. Importantly, delegation is funded entirely from earned revenue. There is no financial pressure attached to growth decisions. Pricing discipline strengthens margins. As experience increases, earners analyze which activities consume the most time relative to return. Low-value work is adjusted or removed. Rates are raised where outcomes justify it. Data from small business studies consistently shows that profitability improves faster through pricing refinement than through volume expansion. Client selection also evolves. Not every opportunity is accepted. Stable earners prioritize reliability, communication, and mutual respect. Difficult arrangements are avoided, even if they appear profitable. Over time, a smaller group of aligned clients produces better income with less friction. Cash management becomes deliberate. Income is separated into operational funds, reserves, and reinvestment pools. This structure prevents accidental overspending and supports calm decision-making. Reserves absorb slow periods without panic. This emotional stability protects long-term performance. Administrative discipline is treated as protection rather than inconvenience. Accurate records, organized files, and timely reporting reduce future risk. Using basic accounting systems and professional guidance when necessary prevents costly errors. Many growing ventures fail not due to lack of demand, but due to neglected administration. Relationships deepen instead of expanding endlessly. Stable earners invest in existing clients through regular reviews and improvement suggestions. This proactive approach increases retention. Retained clients generate higher lifetime value with lower effort. This efficiency improves effective income per hour. Reputation compounds quietly. Trust builds through consistent delivery. Referrals arrive without active pursuit. Each satisfied client becomes a source of future work. Marketing effort decreases as credibility increases. This organic growth protects margins. Skill stacking becomes a differentiator. Individuals combine complementary abilities that enhance outcomes. For example, operational knowledge paired with communication skills, or technical setup paired with training delivery. This combination creates value that is difficult to replace. Differentiation supports premium pricing without volume pressure. Time protection is enforced. Focus periods are respected. Rest is scheduled intentionally. Burnout is treated as a serious risk. Research consistently links sustainable output to recovery. Stable earners prioritize longevity over intensity. Technology is adopted selectively. Automation handles scheduling, invoicing, reminders, and reporting. Tools are chosen for reliability and simplicity. Each tool must justify its cost through time saved or quality improved. Complexity is avoided. Geographic flexibility strengthens resilience. Serving clients across regions reduces exposure to local downturns. Economic conditions vary by area. A distributed client base balances demand cycles naturally. Reinvestment focuses on system improvement rather than status. Better onboarding, clearer communication, refined processes, and improved tools increase efficiency. These upgrades compound over time. Small improvements accumulate into meaningful advantages. Mindset also shifts. Income is seen as a byproduct of service quality, not the sole objective. This reduces anxiety. Decisions align with long-term stability rather than short-term gain. Consistency replaces urgency. Setbacks still occur. Clients leave, demand fluctuates, systems face pressure. The difference lies in response. Experienced earners analyze calmly, adjust processes, and continue. Emotional volatility decreases as confidence grows from evidence rather than hope. At this stage, $5,000 per month becomes a baseline rather than a milestone. Some months exceed it. Some match it. Rarely does income collapse entirely. This predictability enables planning. Savings grow, options expand. Importantly, this stability does not rely on borrowed capital. Growth is organic. Revenue funds improvement. Risk remains controlled. Decisions are made without external pressure. Ordinary Americans who build income this way operate quietly. They focus on fundamentals. They refine what works. They respect structure. Over time, income becomes less fragile and more dependable. The result is control. Control over schedule. Control over workload. Control over direction. This control is earned through discipline and patience. Sustainable income comes from solving real problems repeatedly. When systems replace strain, money follows steadily. $5,000 per month is not a mystery. It is the outcome of structured effort applied patiently, refined continuously, and maintained responsibly through changing conditions.